This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. One of the cooler ideas that I've seen a long time for up-and-coming traders that want to get noticed. Let's say you've got the track record. You're in Omaha, or you're in Ames, Iowa. You're in the middle of nowhere, or you're in the big city. You're in New York City. It's still hard to get noticed. Jack Schwager, the best-selling author, has a new venture, Fundseeder. And Jack's venture kind of is a matchmaking type idea. I'm not going to try and explain it all. I'm going to let Jack do that. Our conversation today covers Fundseeder plus some other questions that I've had nagging at me about Jack's career, things that I just wanted to ask. I hope you enjoy this conversation with Jack Schwager. So Jack, one of the things that I think is really cool about you, that you not only coming on my podcast very early on, which helped a lot because that was where I go back, and speaking of equity curves, I go back and I look at my jump in listens, and it really started with your first episode on my show. But one of the things that you told me that was so cool, and I think you told me this several years ago, we might have even talked about it on a prior episode, but you mentioned that you really liked that I had Jack Horner on, the paleontologist. I think that was like, open the gates for me. Like, I'm gonna go invite anybody on now. Not anybody, but within reason. And I've tried to stay true to that for the last few years. I've really tried to bring a diversity on, and I have to thank you for that, because sometimes it's just one simple little thought from someone who's got a little bit more experience, and they kind of say, hey, it's okay to do that. And you know what? I took that advice to heart.
Yeah, no, I thought that was great, because you didn't keep yourself boxed into the narrow channel of just markets and trading, and you started expanding it and bringing on, Nobel Prize winners and just interesting people. Like, another one, like you had Dan Ariely, right? As an example, right? That type of guest. I think that's a great thing to do, to just get these interesting people. It doesn't always have to be something to do with markets, So,
and sometimes too, just these really bright thinkers. I mean, for me, when I listen to them, it doesn't make a difference whether or not they have market experience. Their thought process, the way they think, the clarity translates to markets and investments.
Yeah, absolutely. Horner, I didn't even remember from that. It's a while since I listened to that podcast, but what I remember is just that the out-of-the-box element of it. Everybody was looking at things one way, and he just kind of took it in a completely, thought of it in a completely different direction. And then eventually everybody realized he was right. But that sort of has applicability from trading as well. You have to be able to see things a bit differently.
Well, and I think that really sums up your career in many ways, and I want to take it back to an early point, not the earliest point, not college or anything like that, but I would love to, for you, as a guy who I think, unless we're talking about books like Reminiscence of the Stock Operator, Extraordinary Delusions and the Madness of Crowds, unless we're talking about these books from like 100 years ago, I really think most people, and this has got to make you feel good, I think most people really consider the first Market Wizards book and perhaps the second, kind of like a pair, as the best trading book that you can read. And what's amazing, and I think you probably started these in the late 80s, and I think it was published in 89, the first one. That's got to make you feel really good that all these years later, I mean, this is a long time, that not only has the book stayed fresh, the books have stayed fresh, the people in the books have stayed fresh. It's been a really interesting confluence of events for you, hasn't it?
I don't always get to meet my objective, but honestly, when I wrote the first Market Wizards book, I had Reminiscences in mind, because I considered that the best trading book I had read. And I did have the thought, and I need to go back and look if I actually put it somewhere in a preface, but I sort of remember, I think, mentioning that, and that was my goal, was that hopefully, here I was reading a book 65 years after it was published, and it was still totally relevant. And I said, if I was successful, with the Market Wizards book. And of course, that was only, I didn't even think of ever doing another one, or let alone 3 other ones. That was the one book I was planning at the time on this subject. So that was a goal that hopefully would be still relevant 65 years later. I mean, it's apparently, from the way that it's still selling, apparently people still believe it's relevant 27 or 28 years later. I'm not putting myself in the same category or whatever, but I think books of that type, the original Market Wizards and Reminiscences, the reason they hold up is because they, not so much of the specifics. I mean, after all, Reminiscences, we're talking about chalkboards and bucket shops and all that, but what really gets captured there is the psychology and the elements of trading, of good trading and bad trading, that don't change. No matter how much markets change, those elements don't change. And that's why these books can have sort of a timeless quality to them. And yeah, that was really my ultimate goal when I was writing it to start out with. And that book is the one I was hoping to follow in a way in terms of what it had achieved.
Well, I think it definitely hit the mark. I mean, I've never, the first one especially, and there's many chapters in the second one. For me, I read them and it's timeless. It's timeless. Let me ask though a sausage making question. How did you decide, or why did you decide, instead of doing, let's say, chapters on these individuals or doing one book that was kind of a narrative, why did you decide the interview format? Because that's obviously been a big part of the popularity.
Yeah, it certainly worked. I honestly, Mike, didn't know how I was going to do it. I didn't have the format in mind. And these things, you've written books yourself, these things sometimes just evolve. The only idea I had was, hey, be fun to go across the country and interview the best traders, and sort of an excuse to meet these people, pick their brains, and it's a fun project to do. I didn't really have the format in mind, but when I started working with the material, I eventually evolved to this format, which was sort of a narrative introduction, and then I thought that the interview part was probably best done in an interview format, and then to have a concluding section that tried to pull together the key points. So that 3-section format is what I used for that book and every other Market Wizard book I've done, because it just seemed to work well. I can't say, I don't think I had the format in mind when I did it. I was just working with these large, raw transcripts and thinking about how to put it together. And after I think I did the first chapter using that format, it seemed to work, and I did it for the rest.
You know what's really interesting, too, is that some of the people that you've talked to, many of the people that you talked to for those books, I can think off the top of my head, Bruce Kovner, Michael Marcus, Rich Dennis, Bill Eckhart, there's probably others. They really never talked to anyone again. And it wasn't like they didn't talk to anyone because they all of a sudden became bad traders and disappeared. It was like they just decided, like, okay, I like this interview I did with Jack. I'm not doing another one. And it wasn't like
it was more, I would say, probably more accurate to say, is I'm not doing an interview, and then they made an exception, and they said, oh, well, I did that, but I'm not doing another one. Bruce Kovner, for example, one of the first things he said to me, because he was a very private guy, and as far as I know, he never did another interview in his life. He told me right out front, he says, you're probably wondering why I agreed to do this. And he said, I've been getting just too big, and there's too many stories out about me, and most of them are just totally wrong. So I figured I'd have one story on the record that was accurate, and that's why I'm letting you do this interview. That was pretty much his motivation. He figured there's going to be stuff written about him. He might as well have one item in print that he knew me. So, because I remember was the Commodities Corp, and so he did know me personally, and enough to trust that I would be, do an honest portrayal. And so that's why he agreed. Michael was very tough, because Michael's a super shy guy, also never gave any other interviews. And even I, who knew him well, we were friends back when in fact, I took his original job when he was leaving to become a trader. And my first job in Wall Street was the job he was vacating, a research analyst position. We kept in touch while he was in New York, met for lunch periodically. And when I asked him to do the interview, he was reluctant. He didn't really want to do it because of this very, very, I wouldn't say shy, but just not wanting any exposure. It was really the fact that a mutual friend interceded and sort of convinced him to do it. And that was the thing that sort of pushed him to agree. Yeah, so a lot of these people just did not do other interviews. And
I think that's part of the secret to the success of the books was the exclusivity.
And it helped after the first book. I'm sure I've got a number of interviews because people had read the first book and felt that it was done well and therefore agreed to be interviewed. Doing the first book helped get people for the second and third and fourth.
We're going to move into a topic that I know is near and dear to you current day right now, 2016. But I want to ask a few more questions as we kind of lead in that direction. I kind of want to build that way. As you were doing the Market Wizards books, and there's been many, give an example. I don't have anyone in mind in particular, but of all the traders that you talk to, and there's many ways. We're going to talk about this today. There's many ways you can measure traders, measure trading performance. And as I ask you, a guy who I know is pretty specific, and I want to say to you, tell me the trader that most impressed you, then you're probably already thinking, well, Michael, what's the definition of impress? So, but I am curious, though. I would love for you to run with that a little bit. Of all the people that you talked to, whether it was a personal situation of their physical presence in the room or a track record that you had verified where you were just like, wow, this is just impressive. Was there ever a one at the top of the list out of all this work where you just said, wow?
It's a very tough question, and it's one that I've had before. It's hard to come up with a really satisfactory answer because how do you compare, you take somebody like Bruce Governor, with all those decades of super successful trading, with huge amounts of money, somebody like Druckenmiller for like a near 40-year track record, compounding at nearly 30%, and both of those people brilliant, in their insights and in the way they were able to interpret the world and translate it into trading. Somebody like Dalio, who builds the world's largest hedge fund, probably makes more dollars for his investors than anybody else, and somebody like Marcus, who does a feat like takes a $30,000 account they give him at Commodities Corp and turns it into $80 million. And while they're taking out 20 or 30% for expenses. So you go on and on. So it's really hard to say like who's the most impressive. But in terms of record, in terms of sheer intellect, and I've interviewed a lot of brilliant people, the person I would kind of single out just because of the extraordinary amount of achievements and just a raw intellect would probably be Ed Thorpe. And people don't know Ed Thorpe to the extent they do some of the others.
He was in your hedge fund Market Wizards book.
He was in Hedge Fund Marketers, right. Thorpe really was the father of so many hedge fund strategies. He was the first person to do a market order fund, the first person to do the statistical arbitrage goes back to Thorpe. Convertible arbitrage, he was the first one. A lot of these strategies, he was the guy who was kind of inventing these things. He also, people don't know this, it's in the book, about 5 years before the Black-Scholes model, that famous article was published and ultimately won a Nobel Prize for its authors, he was a mathematician. He had developed an equivalent model, a mathematically equivalent model that he was using to trade warrants and options and doing extraordinarily well because I like to say he was probably the only person in the world who knew how to price options for about 5 years. So he had all these firsts. He had a track record that he had 2 hedge funds, but just talk about the first one, ran for 19 years, and he had only 3 losing months in those 19 years, and all the losing months were less than 1% losses. When I did a probability calculation that if, in fact, the random walk theorist or the efficient market hypothesis theorist were correct, the probability conservatively calculated using a binomial distribution of getting that type, and I say conservatively because his wins were bigger than his losses. I was just saying, let's assume it's a 50, that wins and losses are equal. So using just the probability-based binomial distribution probability, the odds came out just about equal to the odds of picking one atom out of the mass of the Earth. That's randomly, like just selecting one atom out of the mass of the Earth, a specific one. That probability is about equal to getting his track record if markets were truly efficient. It's just extraordinary performance. The founder of so many different strategies. Now, most people know him because he wrote the book on how to beat blackjack, Beat the Dealer, which sold millions of copies, which changed the way casinos operated. The multiple decks, all of that goes back to Thorpe being the catalyst. And in fact, he did other stuff. He, along with Shannon, who's known as the father of information theory, the two of them back at MIT.
Claude Shannon, yes.
Claude Shannon, right. Was another brilliant, somebody, so you had two geniuses working together. And the two of them were both kind of gadgeteers too, in a way. Just for the lark, this is back in the early 60s, worked out how to beat the casinos at roulette using Newtonian physics. And, the movie that was popularized years later about the group that did the thing with the roulette and the books that are written about it, these guys were like more than a decade ahead. So they developed a miniature computer back in the early 60s when when computers were like mainframes, they were the size of a room. They actually had a little miniature computer. They would time the roulette ball used based on the velocity. They'd be able to predict the octet of the roulette curve. They just wanted to prove it could be done. And they came up with something like a 40% edge. So that's just like another example of something that he did. So the list just goes on and on. If I just say one person who just bowled me over and who made me feel really, really stupid, not because he tried, I don't mean that he made me feel stupid because he was condescending. On the contrary, he was really super nice and totally spoke on as equals and all that. But I knew all the things he had achieved and just awed by the intellect it took to achieve that.
I had on my podcast a few years ago, I had a guy named Mike Aponte. Mike was the blackjack team leader for the MIT team that was made famous in the book and the film. He really enjoyed the transition because he had no idea. As you mentioned, a lot of guys only knew Thorpe for the blackjack, and Mike clearly knew him for the blackjack. That was the MIT influence. He was kind of surprised by the trading prowess as well. Yeah. So listen, here's where I want to go. This is the most important thing to you today, and I think it's really interesting. I could think back for myself, kind of coming into this industry in the early to mid 90s, looking at CTA track records for the first time and really, really enjoying looking at the month by month and seeing assets grow and basically seeing people come from nowhere. And the next thing you know, they own the Red Sox. But it actually goes back even farther. It goes back to when I look at the old MAR reports from the 70s, and I've got all these back issues all the way back to the mid 70s where I can read when, Richard Donchi was still getting write-ups done and these things when he was still trading, and into the 80s and into the 90s. And it was so fantastic to read these things and to look at all this data because as an outsider, you could look at the CTA space and you could say, oh my gosh, yes, it might help to have a connection to Wall Street, but if I develop a strategy and people see my track record, I can get somewhere. And that was the course of events, I think, for a very long time, probably really you could say the 70s, 80s, 90s. But I think there's no doubt that with the you mentioned Ray Dalio and the size of a fund like that, or David Harding in London with 30 billion, something started to happen in the last 10 to 15 years, and the smaller guy has less and less a chance to make a dent and get known. Why don't you talk some about that transition that I just described and maybe add to it and maybe take us up to where we are today in terms of the dream of so many traders out there that say to themselves, my gosh, I'm good at this. I've got this track record. I want people to see it. I want to raise assets. Talk to me some, Jack. You've seen this longer than I have.
No, so you're absolutely right. There's been a definite trend, strong trend over the years for money to go to bigger and bigger and bigger asset managers, people guiding the asset management to also become more and more concentrated into a smaller and smaller group. So you have a small number of financial entities sort of directing most of the assets to a small number very large funds or managers. Part of that is, as this whole process has gotten more and more institutionalized, it becomes a safer thing to do. Well, nobody can blame you for putting money with a hedge fund manager managing $10 billion. But if you're going to put money with a guy who's managing $20 million and he loses, then you're going to have a lot to answer for. So it becomes safer to just put the money with a large asset manager. And so that's the direction it's gone. And the consultants also basically do that. They just play it safe and they direct the money to large, by and large, that's what they do. They direct it to the largest managers. So you've had a tremendous concentration. It's not because the largest managers have the best records necessarily. In fact, I think there's been plenty of studies done that show small managers actually perform better, or large managers perform better before they become large, and so forth. So it's not performance driven. It's more a matter, I think, of what's considered safe and prudent. So you do, I think, have a world now where even if you have skill, it is exceedingly difficult to raise assets because you kind of have the catch-22 element of it. To get assets, you really have to already manage a lot of assets, and you can't manage a lot of assets unless you already have assets. It's just very, very difficult for new people to break in. And certainly, unless you have an Ivy League type of degree and get in with the right firm and know the right people, it's extraordinarily difficult. I definitely think things are much more difficult for small potential new managers who might have trading skill to break in than back in our day earlier on, when you did have CTAs start small and be able to build up. Maybe that happens to some extent, but I think much less so than it used to.
Talk also some about allocators out there. You mentioned kind of this career risk they have, that they'd rather put their money with Ray Dalio and David Harding and be safe, even if it's not necessarily safe, but their career is safe, versus putting it with a small guy. There's also something beyond career risk. It becomes harder for an allocator that's got a significant portion of assets. And you come along and you say, hey, I've got this great track record. I've got 10 million under management. And they're thinking, hey, I can't give you any more money. We'll blow you out. We'll be the whole fund. And that's a real issue too, isn't it?
That's exactly right. The wealth managers are directing large sums of money. The advisors, the consultants, they're directing large sums of money, and it doesn't get them very far if they've got a small manager, because they can't allocate. And they have rules. They have rules like we can't be more than 10% of a manager, or whatever it might be. And there's all sorts of check the box things, so the check the box things managers will fall down. So if you're just a good trader and you don't have a whole operation, with 10 people and a separate guy doing compliance and a separate person doing risk management and a desk, and I mean, even if you're doing you may have an automated system and you don't need all these people necessarily, doesn't make a difference. If they can't check the boxes, you'll never get the allocation. I think part of it is this career risk. Part of it is that they just can't allocate enough money to make it worth their bother. It's just, why do all the work if they're not going to be able to allocate a lot of money? So a lot of factors in the way the asset management world has evolved all sort of drive to end up in a model where a few asset managers and consultants are directing most of the assets to a few asset managers. So a very, very small percentage of managers manage a very, very large percentage of overall assets in the alternative space.
The entrepreneur in you, though, in the last few years, thought of an idea, and maybe this is a team, you have a team, but you kind of said, hey, what about all these people out there, these traders, and you look at the decades of your experience, you've seen how guys could start with very little and become very big. And as we're talking right now, that opportunity might have closed some, but you've decided to initiate this new entrepreneurial venture essentially for the startup trader. Am I wrong?
Well, you're right, except the credit is being given to the wrong persons. All I can take credit for is agreeing that it was a good idea, joining as a partner and helping the process. To give credit where credit is due, we're talking about the firm that I'm a partner in, which is Fundseeder. That company, the idea for it, and I'll talk a moment about what the basic idea is, that was really something that my partner, Emmanuel Bellari, came up with. I actually knew Emmanuel because I was acting as a consultant to a fund for the firm he was with. And so that's how we knew each other. And we were at a conference, and he said, Jack, I've been thinking about this idea. What do you think of it? And this was the idea. His idea was, the problem that he proposed was exactly what we've been talking about, that just all of money goes into the same few large managers, and there's all these potentially skilled managers that are much smaller that just don't have an opportunity. So he said, why not create a central website where you could act as a site where managers all over the world could go on, get their records tracked, and serve as a sort of a place where a central spot on the web where trading talent could be discovered, and on the other side of it, traders that are discovered could then serve as potential investments for managers that are looking for undiscovered skilled traders. So that was the basic concept, and that was Fundseeder. And I said, and I'm the first one to say, hey, that's a ridiculous idea.
Why did you say it was ridiculous?
No, I said I would be the first one to say it, but I if he pitched an idea that I thought was didn't make any sense, I would be the first one to say so. But I said, I was really surprised because I said how good of an idea it was, and it really didn't exist. So I said, I think it's a very good idea. So he said, well, how would you like to be partners? Be a partner in this. And so that's how I got, that's how it started. And then there's our third partner, James Bibbings, who joined, and sort of three of us founded Fundseeder. But it was Emmanuel's basic concept. And part of the concept was, what made it a great idea was, unlike most of the sites that collect data for managers, he said, instead of just having managers put it on, we can link to the brokers and get the track records directly from the brokers, and therefore create verified track records in that sense. And so that's one of the things that the site does, which is really good. So you're getting verified daily track records, and it's open to traders, across the globe. In fact, I think we probably have had people sign up from over 100 countries. If you had somebody in Saigon or wherever who had a little bit of money, came up and had some trading skill, innate trading skill, was trading markets and doing well, there would be no way in the world, no matter how good they were, again, it could be the next Michael Marcus, it wouldn't make a difference. No matter how good they were, nobody would ever speak to them, nobody would look at them, they would have no chance of getting any allocation. A site like this makes it possible for traders, no matter where they're located and what their background is, as long as they can trade, which is really, after all, the key thing if you're looking for people that potentially could manage money. As long as they can demonstrate skill, particularly on a daily data basis, that opens up the potential then for them to be able to break into the industry, whereas formerly it would be virtually impossible.
Jack, talk about the matchmaking aspect of the business model, because there's still going to always be that issue. If a new trader is small, that's still going to be an issue. So talk about, we can all kind of imagine the Fundseeder opens up to any trader, but talk about the people that might want to come there and make an allocation and find out about the trader. Talk about how you've imagined this matchmaking process.
Sure, we have it actually pretty specific. So first thing I have to be absolutely clear is there's really two companies. What we've been talking about is Fundseeder Technologies, and that's where traders go on, get their brokerage, their account linked, get all sorts of analytics like creating equity curves and doing analysis on that and generating stats and all of that. So that's Fundseeder Technologies. That has nothing to do with the investment side. For compliance reasons, the investment side is totally separate. So there's a company, Fundseeder Investments, which is just really getting underway. We've just gotten registered a month or two ago, and the plan was always to get the trader site really functioning well before we started worrying about the investment side of the company, the investment company. Once you've got Fundseeder Technologies capturing the database of traders, and traders who seem to have good skill and so forth, then the investment company can use that data to select managers, put them together in a emerging manager fund, fund of managers. You can also deal with investors that are accredited and are looking for certain types of traders, and you use the term matchmaker, and that's exactly right. Fundseeder Investments can serve as a matchmaker, saying to investors, okay, tell us what you're looking for, and they give the criterion. We have the database on the other side where we can find traders who are potentially matched. So we can also act as introducing traders to Fundseeder Investments can use the Fundseeder database to find traders that are a match for the specific investor and what they're looking for. It could work both through Fundseeder Investments directly allocating through, say, a multi-manager fund, or Fundseeder Investments acting as the matchmaker, so to speak, using the database from Fundseeder Technologies.
Jack, I logged in and was checking everything out. I'm curious about something. You talked about being able to link to brokerage firms so there can kind of be an audit trail there, verified track record. However, and you addressed this some inside the Fundseeder app, not everyone's going to have this. So there are alternative ways to bring in data and verification processes. You guys have thought this out quite a bit.
Yeah, so you're absolutely right. It's actually a difficult process because almost every broker has a different way of handling the back office data and connecting up. It's not like if you do it for one broker, you've now done it for everybody. Now there are certain areas where it is true. For example, like in FX, if people are using an MT4 platform, once you do one, you pretty much get them all, and you can get we probably have 100 plus FX brokerages which we can link to. But when you get down to sort of equity, it's much more difficult. For futures, you have a bunch of firms, say, using GMI, and there's a lot of very close similarity. And you could do one, you could get a large way to do the others. However, you certainly don't have all the brokers automatically. It's a process that has to be built over time, and also you need to get the cooperation of brokers too. So that takes time, and therefore there are a lot of brokers that are directly linkable, but there are also some brokers, some large ones, which are not. And we're working over time to get more and more. So we have some large ones, like Interactive Brokers, linkable TradeStation, as I said, the MT4FX, a lot of the futures firms of GMI. There are a lot of firms that can be, but say a firm like Ameritrade, which I happen to have an account with, is not yet. For something like that, what I do myself is what we have created as we have a simple template, an Excel template, where you can basically just cut and paste, date and your equity by day, paste it into the template, and just go to browse, get that site, and just upload it. That works fine. You get all the same analytics, and you get your track record up there. However, we label that unverified. On the website, they'll be verified and unverified. We still think it's very valuable to do because people who don't have their broker being linkable, we want to still have them be able to access the site and use it exactly the same way. And we also realized that, hey, before we ever would allocate, when I say we, I'm not talking about Fundseeder Investments, or any investor would allocate, there would be a check and a compliance in any way. It's not that big of a deal if it's unverified. We know it's unverified, but we would still need to prove the track record, do the regular due diligence and everything else. Our assumption is that for the most part, the vast majority of people will not put up fictitious numbers because it wouldn't get them anywhere anyway, and it will also mean that the analytics is useless because it's not on real data. So our assumption is that most people who will use that unverified approach because their broker isn't linked will still put up accurate numbers. We don't take it as a matter of faith. However, we assume that it'll probably be a source of traders and that we can check. So if we see somebody who has a really good track record on the unverified side, if it's good enough to consider investment, then we'll check it out. That's how that works.
Jack, you've been looking at track records for traders for a long time in many capacities, often your job and putting fund to funds together. and whatnot. But I'm curious, and you don't have to name any names, but now that you've got Fundseeder together, now that people are connecting their track records, have there been some surprises where you've seen a new trader where you yourself, with all these decades of experience, and you've said, wow, that's just looking pretty damn nice? Or have there been many surprises?
No, it's very early on, because as I said, that the investment side is just beginning. I haven't gotten down yet to the nitty-gritty. With very, very few exceptions, I've interviewed managers or really scrutinizing the track record and all of that. I haven't gotten to the point where I can answer that question because, as I said, we've just started the investment side, just gotten it registered, and just beginning the process of beginning to look at managers from the Fundseeder technology side.
Gotcha. I think the best thing for everyone to do is to go check it out. If people are, look, if you're a trader out there, and I've been receiving these emails for well over a decade. People just ask all the time, how do I reach investors? How do I get my track record known? There is no charge to sign up, so people can. It's free, right? You can go check it out.
Absolutely, it's totally free, and that's because of our belief that for our own self-interest, if we make it free, that's the best chance we have of building the largest base of traders. We don't want to put any impediments there. We provide everything, the linking, the analytics. It's all free. We'll make our money from the investment side, when it occurs.
Well, like I said, I've definitely got some place to point people to. I'm not joking at all. The numbers, if I go back through 15 years plus of emails, I'm sure I could just find hundreds and hundreds of people asking this very question for this type of service. I was not so smart to ever think of the idea, but clearly it's a good idea. And everyone should go to fundseeder.com, right? And then, of course, all the Market Wizards books are available everywhere. Am I missing anything?
No, you got it pretty much.
Okay. Anything else you want to add about it? Any thought that you've got? Anything else that we haven't talked about besides?
I'll just mention one thing that's, and it's something that I've had the kind of experience of, and you've had this on your side, I think, with having books turned into audios. But the first time I've actually been involved in myself being responsible for turning a book into an audio. So I selected the narrator and so forth, and that process was just finished. We were talking about the first two books, the second Market Wizards, New Market Wizards. For the first time in, I guess it's over 25 or close to 25 years, that I've actually been exposed to my own material because I've had to listen to each chapter. Actually, so that's done a couple of things. One, it's made me aware that the stuff, if I was writing it today, virtually everything there would still be, to say I wouldn't have changed hardly anything. In fact, the only things that turned out that I said, that's not accurate, had nothing to do with trading. I think for example, there was a trader, I think it was Fix Brandio, was saying that everybody knows what it takes to be successful traders, just they don't do it. And he says, just like if you have to lose weight, everybody knows you want to lose weight, you got to exercise, and you have to reduce, not eat fats. And of course, I'm listening to that today, and I say, hey, the science has changed. If it's not the fats, it's the sugars and simple carbohydrates. There are the things the couple of things that said, hey, that's not quite right. Actually, had nothing to do with trading. Surprisingly, just all the things people were saying about trading that made sense to me when I put them in the book, I still think they're basically all true. And there was one thing on trading that I did trip over when I was giving advice at the end, talking about risk management and about the importance of not risking too much. And I said, you shouldn't risk more than about 1 or 2% per trade. And to me, now that seems to be fairly aggressive. I would have used the smaller numbers. The only change that related to trading was it wasn't strong enough. I mean, the statement should be even stronger. But so that was an interesting thing, and I think it's worth mentioning just because it does speak to the timeliness of great trading principles.
Well, I will add to that too. I was not planning to do audiobooks of 3 of my books until you reached out to me asking me a question a few months ago. Next thing I know, I've hired someone and I've now done 3 of my books as audiobooks, and I have to give you credit for that inspiration because I probably would have gone another couple of years and not done it.
And it's neat listening to your own book when somebody really skilled is reading it.
Yeah, it's cool. Yeah. Fundseeder.com. The audiobooks, I didn't catch that there. Are they done? The first couple are done. Are they out?
There are audio versions of Market Wizards and Hedge Fund Market Wizards. Those already exist, and Little Book of Market Wizards. But the new Market Wizard one, that's the new one. That's just finished production. It goes to ACX, which takes, I think, about 2 weeks to put their stamp of approval and then release it through, Audible and iTunes and everything else. The new Market Wizards book in audio will be available in about, I'm guessing here, maybe about 3 weeks or so. And I would say that the narrator, I think, was just phenomenal. Certainly, people, I think, should just listen to the free sample just to hear the narrator, and they like it, get it. But I was impressed by the job he did.
By the way, I really expected when I signed up for all these things, I thought maybe because you've got some distribution, I've got some distribution, I would have thought maybe we get a little bit higher percentage of the slice. Not exactly, huh?
It's better than dealing with the publisher. So
That's true. That's true. For sure. It's a lot better than that. But okay, Jack, listen, I appreciate it. Hopefully we can talk again in the future.
Fun speaking to you again, Mike.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.